In this video, I'm going to give you 10 dividend stocks that you need to buy in 2021. It's a good opportunity to buy these stocks right now and hold it for all your lives. So make sure you watch the video till the end because it has some good content and it will help you make better investment decisions. Howdy guys, welcome back to the Handa show. The Fed is going to keep interest rates down for a very long time, and it's not just the Fed. Interest rates are going to be down for a long time in Europe and Japan, everywhere. So only place you can make some money is dividend paying stocks or any other income producing vehicles. So have your list ready at all times, and when those stocks pull back, make sure you pounce on them, add them to your portfolio. Every time I talk about a stock in this video, the dividend yield of that stock would come up on the screen, so you don't have to go out hunting for the dividend yield. So these are the 10 stocks that after a lot of research I came up in my competition against Monkey Boo. He's a celebrity monkey on YouTube, has a few million followers. He and Stephan are investing some money on YouTube and I'm competing with them. I'm representing humanity and Monkey Boo is representing, well, obviously monkeys. So the first stock is not really a stock, it's VDE. It's Vanguard Energy Index Fund. With the Democrats holding a lot of political levers and the new green agenda, the cost of extraction of oil is going to go up. The industry will need to spend a lot of capital on sequestration, carbon capture, and reducing its own carbon emissions. This industry now is just a cash flow play and a cash cow play. So make sure you put your VDE, if you can, in your retirement account and keep collecting those dividends. Because of the carnage in the oil prices in March, I mean, they went to negative $16, I think. A lot of production has been cut. As the world comes back to normalcy and the consumption of oil comes up again, the world will be surprised that the production is not going to ramp up as fast as the demand will. I personally believe fossil fuels will be a smaller and smaller part of the energy consumption basket as we go forward, but it might still give us very high oil prices for the reasons I just mentioned. So VDE, I think, is a must-have for anybody's portfolio just for the dividends. Next I have is Vanguard Healthcare ETF, which is VHT. Every time VHT pulls back, it is always a good time to accumulate some VHT. The expense ratio of the ETF is very minimal. The global population is aging at a very rapid clip. And surprise, surprise, as you age, what comes with aging is high medical costs. So this is again a very good addition to your dividend portfolio. Keep it, hold it all your lives and keep collecting those dividends. In the time of current illness, I really don't have to emphasize to you guys the need for a good healthcare ETF, especially for dividends, because everybody needs healthcare. So this is a very good sector to be in. Another point, unless you are devoted to the pharma sector or you want to buy single stocks like J&J, Merck, Pfizer, which are nothing but bond proxies, it's very hard to pick and choose stocks in the pharma sector. So I would strongly suggest keep buying an ETF. Next stock to own, Alibaba. As I was making this dividend portfolio to compete with Monkey Boo, Jack Ma was in trouble with the authorities in China. I'm pretty sure the Chinese Communist Party, they will rein Jack Ma in, but they will not cause any harm to Alibaba, because Alibaba is like China's too big to fail, and hurting Jack Ma in any which way will only bring a lot of bad press to China. So owning Alibaba when it's in trouble and down is like owning China's Amazon on steroids. Next stock to own, Barrick Gold Corporation. This company engages in exploration, mine development, production, and sale of copper and gold. This company has mines all over the world. I've personally been very bullish on commodities since the March lows. Even Warren Buffett has bought a stake in Barrick Gold Corporation. Next stock to own, Boston Properties. Boston Properties is the largest publicly held owner and developer of Class A office properties in the gateway cities of America. Which are the gateway cities? Boston, New York, Washington DC, LA, San Fran. Great cities with very stable properties. The office sector has taken a big hit in the current pandemic, but I think the cities Boston Properties operates in, they will make a very good comeback, and you get paid a good dividend to hold for their comebacks. So add the stock for the dividend yield. You're buying properties, Class A properties, without having to do anything and just collecting those dividends. Next stock to own, Equity Lifestyle Properties. Equity Lifestyle Properties is the leading operator of manufactured home communities, RV resorts, and campgrounds in North America. It is helmed by none other than our very beloved, our very own Sam Zell. I love Sam Zell for his no-nonsense attitude and the kind of shareholder returns he has delivered over the years. Again, if you look at the history, this is a stock that never goes down. And when it goes down, you buy it and hold it for the dividends and be rest assured that the management will do a good job on your behalf. Next stock to own, International Flavors and Fragrances. This company manufactures flavors and fragrances for a lot of consumer products. If you've watched my previous videos, you know the stocks that I like to buy is usually a monopoly. If it's not a monopoly, I like a duopoly. IFF is part of a duopoly. What these companies do is they make particular fragrances, particular flavors for cosmetic companies, for food companies. So once these companies have a flavor or a fragrance that's locked down with their product, they never switch. So once the revenue starts, it never ends. IFF is again a great stock to own. DuPont is acquiring it, and you can probably own DuPont. Next stock to buy, Raytheon Technologies. Raytheon Technologies is a very, very good stock to own in the defense sector. This sector is again very stable, and you can count on those dividends because their customer is none other than Uncle Sam. Raytheon provides a lot of parts and services to the aerospace sector, the civilian aerospace sector that is. And this year, because of the sickness, most of the aerospace stocks are really, really down. So it behooves you to buy stocks like Raytheon, in which you have a sector that has taken a hit, but you also have a sector where you get consistent income from. So you know the company is not going anywhere. Just keep collecting those dividends, wait for the sector to heal, and the stock will be back up. The last stock that I have for you that you should buy for dividend income this year is Voya Asia Pacific Dividend Equity Income. Voya Asia Pacific's dividend is really good. When I bought it, I think it was close to $11, but even now it's like $9+. It's a great stock to own. The fund's objective is to have a high total return through current income, capital gains, and capital appreciation. The fund invests at least 80% of the money in dividend producing Asia Pacific companies. So guys, if you have any questions regarding these 10 stocks, please message me and I would love to give you more information on these stocks so you can make up your mind whether you want to add these stocks to your dividend portfolio or you don't. But these are great stocks to own, all of them. So if you have some spare money, put it to work so your money is working harder than you are working. That's it for today, guys. I think this was a video that gave you some good information regarding 10 stocks you should add to your portfolio. So please subscribe to my channel, give me a thumbs up, comment below if you have any questions. See you in my next video.